Hello, ladies and gents. Thank you for joining in. In today's live streaming, we will discuss and apply a very powerful strategy. Let me turn this off. A very powerful strategy. I call it the market states plus the magic four, which is completely fantastic. You will see it for yourself. First, I would like to please let us reach 500 subscribers. We need your help. Hit that subscribe button. Also the like. Give us. It's only a one press, huh? Give us that beautiful like button of yours. And if you have any questions, you can write them in the comments or in the live chat if you are watching us live on YouTube. In addition to binary options, because the same strategy we're going to explain applies to binary options, stocks, forex, anything that has a chart, you can apply it to it. Okay. However, that being said, it is very important that you stick to the rules of the strategy, stay disciplined. It requires a little bit of patience. However, in the long run, you will make money out of it, no doubt. Right. So, first, before diving into the charts, I know you like to see the charts and things moving on the charts. Let's first explain the basics of the market movement. All right. So let's begin. So I call this strategy the Magic Four strategy. It is based on the market states and two moving averages. We will explain all in details soon. So let's begin. First, let's define the market states. The market has three things to do. All right. Only three. It can go sideways in a narrow state. That's your first state, narrow state. And then it has two choices to make only. Only two choices. It can either go up to a wide state, wide to the upside, or a wide state to the downside. Wide, upside, wide, downside. And then it will go back to the narrow state. So from this point, it has only one option to go back to a narrow state. Sideways market, some call it consolidation, range, anything. Narrow, let's call it a narrow state. So that's your first state, second, or third, and third. Nothing more than that. That's the only thing the market can do. Range, narrow state, wide state to the upside, or wide state to the downside. Now, from this point, it came back to narrow state, came back here to the narrow state. It has two things to do, either go up again to a wide state or go down to a narrow state. That's it. So the buyers and sellers are either agreeing on a handshake situation. They like this price, so they buy and sell within a narrow and tight range. Or the buyers, they they want more of whatever you are trading. Let's put here, let's say Euro USD, which I suggest you stay away from trading. That's the most manipulated pair on planet Earth. Okay, let's say, come on, Apple. Whatever the thing you are trading, anything, it might be called anything, at some point the may want more of it. So they will push the price to a wide state. And at some point the sellers want to dump that thing you are trading and they will push the price all the way to the downside to a wide state. Easy. So don't let whatever you are trading fool you into thinking that the market can do something else. It only does those three things. It moves in a cycle: narrow, wide up, or wide down. Boys and girls, that's it. Very easy, huh? Now, now that we have our states in place, how can we what is the purpose of adding the 200 moving average, simple moving average, and the 20 moving average? Those two, the 200 and 20 moving average, will help us spot those narrow and wide states. So you will have, usually when the price in this is in this situation, the 200 moving average in pink right here, and the 20 moving average, let's say in blue, will also be very close together. So whenever you see a ranging situation and both moving averages are very close together, you have a narrow state. So how do you enter the trade on binary options? Let's explain binary options first. And I will show you some forex examples and stocks if you like, no problem. Same thing. So how do you define your entry point out of this out of these two states? Here, from this point, let's explain the candlestick patterns that we need to look for. There are two very simple to see, very easy to spot candlestick patterns. I will show you first the green to the upside candlestick. So the first thing out of the state, you need to see a powerful green candle, engulfing candle. It has to be a sizable candle. It has to be bigger than any candle you see to your left side. Okay, it has to be bigger than anything you see here. And it has to go above your magic four. Your magic four are the 200 moving average, your narrow state, swing high and swing low, and your 20 moving average. It has to go above those. Preferably, if it's moving from the 200 moving average, it's going to be identical. So here you have your 2 minutes. We will be using the 2 minutes chart or 5 minutes chart. Once you see that candle breaking out, powerful, strong momentum, you get yourself in here on a buy position, 4 minutes or 6 minutes, up to you, no problem. This is your first signal that a push to a wider state is happening. Second candle pattern you can rely on is the hammer. Let me draw you a hammer over here. So what is a hammer basically? A hammer is, we are talking to the upside for now. You have a candle moving to the downside. It's strong, it's big. However, the buyers kick in, okay, and do this. You start seeing a wick and a small body at the top. So technically, this bullish, bearish red candle became actually green. So if you want to draw this candle, actually, theoretically, you can do this easily. because in this case the buyers took out and annihilated the sellers and closed at the top with a wick. Now, second situation, even if you see a red candle forming with a bottoming tail bar, bottoming wick, long, decent size wick, and the red body, small body, this is also a sign price is going up. For the sell situation, it's the same thing, but the opposite. So you'll see this, the opposite direction, inverted hammer, or you will see this, or you will see a strong bearish engulfing candle pushing to the downside, sizable bar. If you see those happening here, breaking below the magic four, you got yourself a move to the downside. Easy, isn't it? If you have any questions, this is the time before moving to the charts. If you have any questions so far, please do not hesitate to ask. If you are watching us on a replay, you can use the comments box. Okay? Before going into the charts and actually seeing how this whole market state and how Majiv, come on, and how this magic four thing works, this is the time to ask your questions. So let's move to the charts. If I see no questions here, I'll be moving to the charts. All right. So we will use to trade. We will use the market states plus what I call the magic four strategy. It works for binary options, forex, stocks, indices, futures, crypto, anything that has a chart. You can use this strategy on it. So let's move to the charts. Okay, let's set up first the chart by selecting the 2 minute candle time. So every candle you see represents the 2 minutes of price data. Let's also add our moving averages. In case usually I don't use indicators, but when I do, those two are mandatory for me. I don't consider a chart without those two. So you go and edit your period of the first, the 200 SMA, styles. I prefer pink, make the line a little bit thick, and click Save. The second is a 20 moving average, SMA, go to styles, select your preferred color. I go for turquoise today. I need something bright and save. Now, how do you see the narrow and white state here? So look at this. This is beautiful. I'm working on a live chart, so there's no hindsight situation. Okay. So here you have your magic four. Here they are. These are your magic four. Let me be more precise and use the yellow. Okay. So in this case, you have your magic four here. Okay. Swing high, swing low, narrow state, close together, both moving averages. Excuse me, I made a mistake. So this is your narrow state. Swing high, swing low, and you have the four included in this rectangle: the SMA, the swing high, and the swing low of the previous 10 to 12 candles. No problem. So as you can see over here, let me zoom in. Out of this narrow state, let me use. Okay, let me remove this. Enable timer, disable auto scroll. Let me go ahead and bring a rectangle from over here, much easier. Swing high, swing low. take it to the future, because sometimes you'll have to wait for your signal. So you have your swing high and swing low. Let me edit this as well. 2 pixels, background, no background. Why do I still see a background? Okay, so here you have your narrow state. So as we spoke before, we have to wait for a bearish, strong, bearish, sizable bar to the upside, or a hammer, long wick, and a small body over here. So whenever you see a breakout with a strong, you see this is your signal to enter. If you look to the left side over here, it is actually a very decent and sizable green bar, and it closed strongly above your upper swing high and above your magic 4. So this is a no-brainer. You don't think, you don't hesitate. You shoot your entry point from here. You take it from here. Huh? You are here watching the market with your goggles. So you see this strong bullish candle pushing to the upside, and you shoot your entry point. Boom, over here. You take it for 4 or 6 minutes. Both cases, you have a winning trade. All right. If you are a forex trader, let me show you a beautiful thing. Let me change the color. If you are a forex trader, this is your entry point. This is your stop loss, somewhere over here, no problem. And look at this beautiful push to the upside. Come on, I can be a very nasty drawer, huh? So, as you can see, in this case, you have a ratio, a risk reward ratio of around, let's say here you have 1 to around 4, let's say, or 3.5, roughly speaking. See this move? Beautiful move. So let's say it went back on you and you lost one, let's say $100. But one move to the upside can make you a risk reward, can make you $400 actually. So this is how it's set up. Okay, let me look for something to the downside to give you an example of both situations. Let me find something that you see the narrow and wide state. So your narrow state, and boom, it went up to the wide state. The wide state can be clearly seen by the huge difference in space, a huge distance between your 200 moving average and your 20. Also here, even more narrow. And the market has no choice but to come back down to the 200. You see, it's coming back down and back down. So you as a trader, you don't trade in these zones where there's a huge space. You wait for the 20 and the price to come back to its big mama, the 200 SMA. Okay. Now let's find a sell setup out of a narrow state to a wide state. This is nice. It's relatively a narrow state. I would try to find something identical. I mean, uh, this is beautiful, beautiful setup. Look at this. So the pair came from a wide state, and it reached the 200 moving average, and now it's in a narrow state. Okay. So what do? You bring your rectangle from the tools, drawing tools, rectangle, and you mark your magic four. These are your magic four. You push it to the future because sometimes you'll have to wait. Sometimes it's gonna give you the move here, for example. So let me adjust this thing to be clear. Don't know why I'm removing the background. Still, the background is still showing. However, we do this. So here you have your magic four, your 20, and your 200, very narrow together. You have your narrow price range, and you marked out your swing high and swing low for the past, around 8 to 10 candles. No problem. So your entry point, your trigger, and your shoot to enter the trade. Let's see. Let's draw you. Okay. Let's draw you. So you are the trader over here. Okay. You are the trader. You have messy hair. Just woke up from the morning. Messy hair. It is you. And you have your pair. You have your goggles or your glasses, magnifying glasses, looking at the chart and waiting for your engulfing, strong, bearish candle that will break your swing low or swing high. It could have easily gone to the upside, no problem. So you are waiting for your trigger to shoot and enter the trade. So at some point, oops, you see a breakout of your swing low, a strong bearish momentum right? So what do? You don't think, you don't hesitate, you don't overanalyze. You have all your signals in place. You send your torpedo from here. You have your gun, boom, over here. 4 minutes or 6 minutes trade. Here you go, you have your winning trade. All right. Again, if you are a forex trader or crypto stocks, anything, this would be your entry point over here. Boom. This is your stop loss over here. And look at this beautiful drop to the downside. How amazing is that? That's a ratio of 1 to also as well here around 4 or 3.5 risk reward. Amazing, isn't it? So let's say it put back on you, you got stopped out, you lost 1. But imagine this. Let's say you lost 1 and then the next trade you won 3 and then you lost 1, the next trade you won 4 and then you lost 1, the next trade you won 2.5. You see where I'm going with this? You are on the in the long term, in the long run, you will be profitable if you stick to the rules. All right. So now that we have given an example of both narrow state and the move to the downside to a wide state. See, wide state. The 20 moving average is very far away from the 200. Now let's find actual trades to take. Okay. Let's look for. You see here, beautiful. Come on, guys. It doesn't get any better than this. You have your wide state over here, your narrow state, excuse me. Okay, and you have your 200 moving average over here. And this thing happened. A strong bullish candle closing above the 200 moving average and above your swing high for the recent 10 candles or so. In addition, You have two hammers back to back. This is, whenever you see those two happening back to back, you have an 80 to 82% follow through rate to the upside. So as a binary options trader, you enter here, boom, 4 or 6 minutes trades, you have your win. As a forex trader, if you are trading forex, that's your entry point here. You can even enter here, no problem. You can enter here, boom, that's your stop loss over here, and this is your move to the upside. I mean, guys, this is something that's happening right now as we speak on the chart. I'm not cherry picking charts and showing you some things that are not actually taking place in front of us. So let's look for a pair that has a narrow state and take a trade. We are trading, this is Sunday, so I advise you not to trade binary options on Sundays. The markets are very volatile, very choppy to be exact. See, wide state, and now it's coming back to its narrow state. See, narrow state, boom, wide state. I need something. Look at this beauty over here. I mean, come on. You mark those four over here. You have a clean break, 4 to 6 minutes. You have a win. Boring. I need a narrow state. This is too choppy. I would avoid it. Look for something, look for a clean chart. This is what I call somewhat a clean chart. A clean push to the upside and then a clean drop down. Avoid this at all cost. And this is a disaster. I hate this pair. Let me see if we can find something. This is forming. Nice. Nice setup. Okay, so this is your narrow state. You get your rectangle from the drawing tools. You mark your swing high and swing lows and your magic four. Let me adjust this. So you have your potential trade happening. So you see 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. You can narrow it a little bit to over here. So you have your narrow state happening. We have two things to watch for. Either a break above the 200 SMA from the top and a strong close here from a very bullish engulfing candle or a hammer, or we need a clean and clear drop. Come on. We need a clean and clear drop to the downside from strong bearish candle or an inverted hammer, long wick, small body at the bottom. You take your trade. Now, we have something happening over here which could be a potential trade. So let's see. Beautiful. Let me adjust the time, the expiry to, come on, 4 minutes, 4 or 6, no problem. Just this to 5. it's rejecting. I don't like this. So you don't take the trade. You need something to close. You need a decisive candle to a decisive bar to take your chances on it. That's beautiful till now. However, I need a strong close. Beautiful. Come on. That's it. I'll take it here. 4 minutes to the upside. Nice. Beautiful. I like this gap. So let's see. It's a beautiful setup. Okay. Nice. You don't have to wait for it. Once you take the trade, as a trader, you have nothing else to do. Your job is done. You can go ahead and find another setup for you to trade. Okay, but since I want to show you how things work, let's watch it. If you have any questions, this is the time. So we waited for strong, bullish, engulfing candle to form. If you look to the left side, it's almost bigger than anything you see over here, or the same size as the big ones. And it clearly pushed above your magic four, your swing high, and closed more than 50% above the EMA. That's your entry. You go for it. Now, of course, you won't win every single trade. That's impossible. If at any point in time I tell you there's a strategy that will win every single trade, stop watching my YouTube videos. Full stop. You do your homework, you enter the trade, you stick to your risk management rules. For binary options, take 4 to 10 trades per day only, and only risk 1 to 3% of your capital per trade. Okay? In this case, you will be safe. You won't incur, the disastrous losses. You'll keep your account safe. 1 minute left. Let me see if we have another setup. I need one more to show you how it's gonna unfold. Let me add a few more high payout pairs. It's gonna lose, no problem. Let me see. Okay, it's a losing trade. So what? Move on to your next setup. Or in this case, if you lost this trade here, you see a huge engulfing pattern to the downside. You still have your magic four in place. So you wait for a breakout from the other side. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, we can move this over here. Let me see. 13. We can do this. So now this is your breakout point. A strong red candle to the downside. You take your second trade. You still have your setup already in place. Let me see something else. I set an alarm over here. No, not yet. This is too jumpy. Avoid it. Also, very jumpy. I will show you when we finish. Look at this beauty over here. I mean, come on, guys. Look at this. This is your four, magic four. Boom, you enter over here. 4 or 6 minutes trade, you have a win. Forex trader, this is your push. This is nice. It's happening right now. Come on, beautiful. I'll take this. Also, you have an overall trend to the downside, so I'll take. Come on, we need a clean, powerful close. Come on. That's it. It's rejecting from this point. Let me try and draw the rectangle for you in the meantime. See that? Beautiful. Beautiful breakout. Swing high, swing low. You have your 220 and 200. Fantastic setup. Wait for the last 30 seconds to make sure that the probability of a pullback on this candle is very slim. See, okay, it's happening. Come on. Beautiful momentum. I'll take sell here. So you have all your rules in place. This is why I don't like to trade on weekends. The candles can move, can be erratic. Beautiful. However, don't like this gap. But still, we have a beautiful setup. Let me make this more visible to you. So you have your magic four. Come on. Nice drop. Beautiful drop. So here you have your 20 moving average, your 200 moving average, and you have a narrow state. The price is moving sideways. Okay. So the only thing you have to do is identify your swing highs and swing lows with a rectangle. Whenever you see a clean break with a strong, sizable bearish bar, you go for a 4 or 6 minutes trade to the downside. How beautiful is that? Nice. The first one was on the Euro CHF thing, right? Let me see where it is. dropping beautifully. I don't see any reason why we might lose this one. Beautiful setup. So the euro CHF was our first entry. See, we are waiting for another. If we get another push up, the strong red candle, so we have what some people like to call a break and retest, which is okay, even better. And if you have a push to the downside, you take it straight to the downside. So this is the last trade for this video, this live streaming. If you have any questions, please do not hesitate to drop them in the comments or live chat. If you are watching us, please let us reach the 500 subscribers mark. Subscribe, hit the like button, and share this video. If you have friends you trade together, share the video with them. I still have 35 seconds left. It's gonna be a win unless something crazy happens. So till now, beautiful. Saved by the bell. Till now, we have one win and one loss. If you take 4 to 10 trades per day, and if you stick to the rules, and if you are patient and wait patiently for the optimum setup, you will get 4 out of 5, 6 or 7 out of 10 almost every day. All right, which is very decent. You will make money using this strategy. Okay. Um, I cannot I cannot state enough the importance of discipline and patience and education. I've been I've on this channel. This is maybe the second time I explain and trade the strategy live. You can go back and watch those. Watch the video new. Okay. You tell yourself, I want to shove this strategy and its rules down my throat and test it on demo. You need at least 100 trades on demo so you are sure that the strategy is working for you and that you fully grasp and understand the rules involved. Do this, and I'm telling you, you will make money. So if you took a 6-minute trade, till now we are winning. It's only 6 minutes, you have a win. Let me show you something on Forex. So this is trading view, Euro Japanese yen. Okay, this setup happened over here yesterday, the day before Friday. So look at this beauty. You have your narrow state over here, including your 220 moving average. All right. You have this small candle breaking out. You don't take the trade. I'm using the 5 minutes chart. You can use it on any chart. So you wait for a strong, sizable 5 minutes bar like this one. Come on, mouse. Like this one over here. This is your entry point, and boom to the upside. Now, how do you define your stop loss? Stop loss is just below your entry candle, your take profit. In this case, go back a little bit behind. You see here you have here at this point you have a strong supply area. So this is where I set my TP1 take profit one. So this is a 5 to 1 risk reward ratio, which is fantastic. Also, you can trail your way into even more profits. Look at this. You could have easily kept on trailing your stop loss and taking more profits up to this point. So this is a one. You are risking one bar to cash out on all of this. That's a cash machine, friends. I always advise you when using the strategy, whenever you see the price moving away from the 20 moving average, this is your signal to exit the trade or take 50% off the table, for example, and then keep your other 50 until you reach the level above. I mean, whenever you hit your TP1, bring your stop loss over here, somewhere over here. You have a guaranteed, you are now in profit, you are trading risk free. So it's beautiful. And I'm showing you Friday. We are Sunday today, so I'm not cherry picking, clear. You want me to show you something else? Let's do something else. This was also a setup I took last week, also Friday. Look at this beauty. You have your narrow state, you have this beautiful engulfing 5 minute bar, boom over here, and this is your way to a 2.7 risk reward ratio. 1 to 2.7, which is fantastic, you know. So that's it for today. Thank you for watching this live stream and see you on the next one.